From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for March 28th, 2018. Today we're going to take a look at the AUDUSD, the Australian, versus the US dollar for today's trade analysis. We're starting here on the daily time frame. Two different trends, of course, here on the page. We had the previous uptrend, the rising blue trend line, falling black trend line, the current downtrend that the currency pair is in on the Australian dollar. We've seen some ups and downs within this downtrend, not quite a straight line trend like we saw on the blue trend line. There's been some ups and downs here along the black trend line, rising and falling, rising and falling. Currently in a falling phase. We have been in some congestion here inside this black box for several days now. We're looking 1, 2, 3, 4, 5, 6, 7, 8 days holding in between the blue and the green shaded area. What's interesting today is we now see the market getting underneath that blue zone. Now, it's been here before. We see back here on the left-hand side where the market got underneath the blue zone and then suddenly turned back around and went all the way back to the green zone. So we need to be careful that this is a real breakout to see if this is going to be a real breakout, or is it just another false breakout to tease us that is going to continue the downtrend. We go back to the left-hand side of the chart, the blue box that you see back here, between the orange and the blue shaded area. We know that historically, that if the market can get under and stay underneath the blue zone, that's 76.90, 77.10, the blue shaded area, that there's a good possibility we see it down here to the orange zone, which is down to 76.50, 76.30. That's what it did back here. Look at how long it was stuck inside that blue box between the blue and the orange shaded area. So that's what we're looking for over here on the right hand side. If we can successfully stay underneath the 7700 level, the blue shaded area, there's a good chance that we see it back down here to the orange shaded area, or lower, but at least the orange shaded area as our first targeted level. And the risk here is that it turns back around like it has previously, gets back above 77 and goes back in the other direction. Let's zoom it in on this a little bit. And so again, we look back just a little ways, and over here on the left-hand side, the market had closed underneath, next day opened, and turned around and went back up again. So what I'd really actually like to see is today's candle. Well, now, yesterday closed underneath the blue zone. That's good news. I did that back here. Today's candle, I'd like to see stay underneath 76.90 as well, which this one didn't do. This one opened and then closed way up here at the top of the green zone, 77.65. So what we'd like to see to increase our confidence that this is a real deal breakout and not a false breakout like what happened here, we need to see it stay underneath this blue zone. That means really that we have to wait until the end of the day today to know if this is going to be the real deal, because we don't want to jump the gun and assume that this is going to be the breakout, and next thing you know, it does what it did back here and gets right back above it. Now, there is risk that you can take. You can assume and look for other clues and evidences to this, but we'd really like to see today's candle stay underneath 76.90, 77.10, the blue shaded area, if we're going to see this continue the pressure back down in the direction of trend, back down towards the orange zone. So for the day today, we want to see it stay under the blue zone, target back to the orange zone. The risk here is that it turns back around, gets right back above the blue shaded area like it did back over here. Now let's take it down to the 4-hour time frame. This is going to give us a little bit of a different view of it. And here on the 4-hour time frame, we could see here was the false breakout, by the way, that it didn't look like this on the daily. It just looked like two candles. But look at this. We see the market getting underneath, falsely breaking out underneath the blue shaded area back here where the black circle is, and that's where it turned back around and went back up. In fact, we took the short last time here and got out as soon as it pushed back above the blue shaded area. So again, what I'm looking for is for it to stay underneath. Now, typically, we'll look for it to stay underneath 76.90 before we look for a new opportunity to go short. And so I'm waiting for the current 4-hour candle to close to be sure that it just doesn't turn into a big blue candle and get back above the blue shaded area. We do have some news out of the U.S. coming up in just a short while from the recording of this video. 8:30 a.m. Eastern U.S. time. GDP data out of the U.S. may be an influence for this currency pair, but for the day we need it to stay under the blue zone if it's going to continue its bearish movement in the direction of the trend. A turn back above the blue zone would likely lead it back towards the green shaded area and back into the mid to upper 77s for the Australian dollar today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.